Good morning, Dave Baldwin here with the Introverts in Business podcast. This is our 6th episode, brought to you once again by the Center for Excellence. And joining us again, we have Martin Brossman, success coach, Dan Scala here, founder for the Center for Excellence. And in today's episode, we're going to tie together some of the concepts we talked about in the earlier episodes. This series has been about starting a small business. So we talked about a couple different things. We talked about mentorship. We talked about creating a plan versus execution. We talked about the qualities of confidence and competence. Concept of funding. When we get into funding, I thought this was a neat way to bring it all back together, because in order to decide how you're going to fund a business, you have to incorporate all those different skill sets. Now, there have been traditionally 3 ways to fund a new business venture. One is self-funded, or bootstrapping your business, which basically just means getting customers, using the revenue to fund your business, and just doing it completely from scratch, from the ground up. A second way is called using friends and family, getting in the people that you know, or the way Carol Roth, as the author of The Entrepreneurial Equation, she calls it 3 F's: friends, family, and fools. And the third way is to launch it, which is to get funding from an actual investor. That would be either an angel investor or a venture capitalist. Now, there's another option here that we're also going to talk about today, which is called crowdfunding, which some of you may already be familiar with. This is pretty new for the last few years, and it essentially means utilizing a platform, a number of these different platforms that are out there, to raise small amounts of money from a large pool of investors. So I've got a couple of different questions for the panelists, and Dan, later on we're going to get to you, because Dan works with small businesses and startups to help them to procure funding for their businesses. But before we even get to Dan, I have some questions for Martin. And because Martin, you mentioned in one of the earlier episodes, you said ideas are a dime a dozen with your comments, and that the success factor was really about having the emotional fortitude to take an idea to the marketplace. So my question to start things off is, what do you think is the best way for a new entrepreneur to go about developing that type of emotional fortitude if they don't already have it?
Well, I'm really against the idea of having discipline. I'm for the idea of having structures that make you look like you have discipline, and then practice that ingrains it into muscle memory. And that, to me, is what really works. I mean, if you take it to the extreme of the military's best, they have practiced something so much that the muscle memory is taking over with the structure that appears more like discipline. And so in your question that you're asking is, how do you develop emotional fortitude to do it? Well, one is areas to practice that are relatively safe to experience failure and not be a failure. And that's, to me, important muscle that needs to be developed. And I just remember my Aikido instructor telling me, he said to us that my goal is for you to learn to love the mat. And I thought, what does that mean? And I realized, well, part of Aikido practicing is falling down, when you're attacking. And if you're comfortable and you're okay when you fall down and get right back up, that's a big deal. And then he said the other goal is for if you're ever in a dangerous situation and you have to use what you've learned in this class, you think to yourself, an opportunity to practice. And so the context and the framing of it's very important, but the awareness of what a real risk and how close to what can you do, what can't you do, and so forth. Kind of my friend gave me once his AA coin. I don't know if they still do this, but it had the Serenity Prayer on it. Well, this kind of applies a little to that too.
Sure.
What can I deal with? What's something I can take an action on right away? And what's something just outside my control, I can't do it. And the biggest thing in this with money is, if you don't have the fundamentals to cover lights and other things, the stress level will get so high, your ability to be effective will go down. So be cautious of crossing that line.
Sure. So, I mean, it reminds me of something I heard before about how if you want to learn how to ride a horse, the main skill you have to learn is how to fall off a horse and not break your neck.
Basically. Yeah,
and
that's
do
right.
It lots of times.
That's right.
So and this kind of ties into my next question, but it sounds to me like, because what I wanted to ask you about next is credibility. If I'm sitting down in front of an investor saying, I want you to write me $100,000 check to fund my business, it sounds to me like what you're saying is part of what you need to have established is a well-ingrained practice of failing and not becoming discouraged in order to be able to do that effectively.
And it really works with fail, become discouraged, get over it, continue. You know, every time somebody says something, something will go online and something will be negative or something happens in my class. I've been doing speaking since like 91. And I still get offended or hurt or upset inside. It's the recovery rate is the big thing. Developing the ability to recover faster. And that's really important, especially when it comes to dealing with this money. And really understanding that this is important. The money is a representation of work. Really money is an agreement at a global level. It's the best example of human beings actually having faith and trust, because it doesn't exist, it exists as a concept. So understanding these things fundamentally so you can be malleable. It's sort of like understanding the web of the matrix and realize what it is and how it works.
Now, do you find that there are specific habits that an entrepreneur could put in place or need to put in place on a daily basis that go in line with what you're saying here?
Yeah, one, you need to know where the money is and need to keep track of it and know what the primary indicators are. And the other thing is, the biggest piece I ever see from the people who work in day jobs moving into entrepreneurship is the flaw of hardworking people of perfection. And I brought this up again, but it's a habit I've had to break with people where I'll go, you are not going to survive because you are living in the delusion that you can have perfection in everything you do. And your time really is money. When you're self-employed, you wake up every day going, how am I spending not the next hour, but the next $100? And you really should, in my view, tie your time to money. So an example would be, let's say walking the dog, is walking the dog worth $50? Well, yeah, because it means otherwise you have to clean up the carpet, and the roommate will be mad at you, and there are other consequences that occur. So that's, to me, it's almost like it's a paradox. It's like view yourself as a product where your time really is money. Think about how you're spending not your time but your money, and it will have a greater humanizing effect. I don't know a better way to say it, but it's more respectful of you and others.
Okay. Now, Dan, I'm going to shift over to you here for a minute. As we talked about here in the beginning, part of what you do on a daily basis is working with entrepreneurs that are looking to find sources of funding. So I wanted to dig into that a little bit here.
Okay.
And first of all, what type of businesses do you find are typically the most viable candidates for actually getting funding from investors versus the ones that are not?
I really look at it the other way around. I don't look at it from a business standpoint. I have people come to me, approach me, and I look at the people first, because to me the bottom line is it's always a people business. And whether a person is fundable or not depends on that person, their skill, experience, character, credibility, all of those elements combined with their business idea. Now, they may have a product or service. Some products and services are much more attractive and much more market friendly than others. But I always focus on the person first. I guess the longest shot, or what I see as far as being competitive and low funding, is service organizations. When the recession hit in 2008, everybody and his brother went out to be a consultant. And so the market got flooded with people wanting to call themselves consultants and coaches and this and that and the other. And it's not to say there are some really great, credible ones out there, people that are doing it for a living that have proven themselves over time. But there was a real need need for people to earn income, stay employed, and the best way to do that was to take their skills and ability or what they knew and use them. So service-oriented and nonprofits to me are two of the hardest to do because it's just a very, very competitive market. So in those markets, you need a real shtick. You need a real unique value proposition. Is how is my service different than others, and have so that someone can immediately see it.
Now let me just ask you a follow up on that. For the service business, have you found that it makes a difference if somebody has a documented process that they can sell as a franchise or some kind of an information product?
Yeah, that would be helpful and useful. I think the ones that are most, and now that you bring it up, to me, when people are looking to market or sell something, their audience is asking one of three questions. Will this person sitting across from me at the table that wants to provide me a service, will they do one of three things for me? Will they make me money? Will they save me money? Or will they solve a problem I have? And if you aren't answering one of those three,
or entertain you enough that it's worth money.
Yeah, there you go. Just like we're doing now, right? So you got to be answering one of those three questions. That's why, to me, sales is always a big one, because everybody in the marketplace, all business owners, understand the need for sales, because sales is definitely a driver for revenue. In other words, without sales, without revenue, you do not have a business, or you don't have a viable business, because that's where it all starts. Marketing is another one that's a little soft. It's necessary, but it's softer because people don't necessarily see the need for it right away. But it's where everything starts. You got to identify your major market segment that you're going to operate in. So marketing is important. But so when I first went into this, I didn't think about marketing at all. I thought about, I need to make money. How do I sell? So I just intuitively went out and started contacting those people in the market that I believe could use the products or services I had.
Okay. Now, when in the beginning here, going back to funding here for a second, there's the different types. It sounds like you're basically talking about a bootstrapping type of a scenario. So what would you say makes the biggest difference between, like, when you are talking to an entrepreneur? I would imagine some of them you're going to recommend that they just bootstrap a business, versus some that you're going to say, okay, I think this is something where it makes sense to bring in an investor, or possibly looking at crowdfunding. Can you talk a little bit about the differences between what makes which of those different paths you might recommend for somebody?
Sure. It goes back to a good friend of mine that I really like. His name is Common Sense. And it's the,
you don't see him around much these days.
But the deal is it's the crawl, walk, run. In other words, when you start a business, if you're providing a service, the quickest and easiest way to start it is to start it locally with somebody you can get in front of that's within a 3 to 5 mile radius of you, or in the same town, or the same city here. So you can start your service and try it out and do your due diligence. You could vet the business, see what kind of reception you get. Very, very low cost initially. And that's there's something that's really gotten real popular today, is called lean startups, where you just go out and start. You have a business plan, it's in your head, or it may be a one-pager, and you go out and start taking actions, because chances are, as dynamic as the world that's out there, you're going to have to pivot. Or
no matter what.
No matter what, exactly. At least twice, if not 3 or 4 times, before you hit on something that is your niche that you can really, really fulfill on. So I don't know if that got you answered or not.
So you mean I shouldn't spend the next 6 months coming up with a perfect business plan, hope that it's never going to change?
Yeah, back to Martin's point of, and that's part of the problem with those of us that came out of the corporate world. The corporate world has had deep pockets. Aim.
Then I want to go, just shoot yourself. I'm engineers, brilliant, getting ready, to start, and calculated risks that aren't very expensive, where you can afford to fail. It's just, it's sort of like loaning a good friend.
Yeah.
Loaning the money you can afford to lose.
That's right.
You know,
That's right. Yep.
or doing an ad on Facebook.
Yes.
Spend the
Yep.
money you can afford to burn.
Yeah. And it does go back to your main point of, we got to get out of that big, those of us that came out of the corporate world have to get out of what's called a big box mentality.
Yeah.
Get in that street smart mentality that Mark's
That's right.
referring to.
Yeah.
How do we get
Well,
in
it
action?
says like the key is you have to actually spend the money, not theoretically spend the money on paper.
I have many people where I look at them and I go, they don't have much education. And sometimes I look at them and go, I'm not sure how smart they are, but they're relentless and they've got an idea and they whack away at it and they learn from their mistakes and you can't knock them over.
I met a guy once who said, "Dumbness on fire, I'll beat brains on ice any day."
That's a great quote.
I love it.
The tragedy is some of the people I know that are brilliant, that they're, the compensated egos or the gets in the way over just whacking away. So anyway.
Now, here's one for both of you. For those of us in the audience, and I'm going to actually include myself in this, that like Shark Tank,
Yeah.
do you think that this is an accurate model of how investors actually make decisions in a business, or do you think there's any significant departures from how it works? And particularly, Dan, since you work with investors, I'd love to hear your perspective on that.
Certainly.
I love Shark Tank. I love watching the sharks because they do ask all the realistic questions. Okay, I think the world does get a distorted view of things because
just 1 second. If you haven't watched Shark Tank, you can go on ABC and watch episodes for free. But
you can?
I remember like some of the questions that always come up is what are your sales?
Yeah.
What do you have that's proprietary? What do you have that's established as a brand? And what could be extended further into other product lines? So they're always looking at scalability. But anyway, so go back to what else were you going to say on that?
To me, it's a great learning tool. You can sit there and watch several episodes of it and get a great sense of what some of the critical keys are. If you need outside funding, what you need to be able to answer quickly. And the main thing I'd love to point out is there's two different levels here that have to be considered with any startup business. It's what in the investor circle it's called pre-revenue. And that's when it's just an idea or a concept that's being vetted. That is a lot higher risk than a company that's already earning revenue, because if you got your revenue stream started, then you can potentially build it. So that's kind of the difference between angel investors that are usually what's considered seed capital or round one financing, which the angel investors themselves realize is a high risk scenario. In fact, in their business model, they build it in so that only 1 out of 10 is going to be a home run. They hope to get 1 out of 10 home runs.
They've accounted for that.
Yeah, and they've got 7 in there they know will be just total flops. So their average return on investment's got to be high enough that they can.
The winners got to be bigger returns than all the losers put together.
So that's even good. You look in there.
Sounds basically like playing poker. You're gonna have your good days and your bad days.
Well, the professional pokers that bet against themselves and the other people. Where they're the game.
Yeah. So the angel investors usually are the ones that come in front. Next to friends and family, and angel investors are the ones that come in front end for seed capital, startup capital, and that's the highest risk. And obviously the percentage goes with the risk. They're looking for 18 to 20% plus return on investment. The venture capitalists are the ones that love to come in after you're already about $1 million company and you want to scale to 10 million. So they're looking. So most venture capitalists are one guys that are looking for established revenue, which is round 2. They already have some traction. It's just a matter of scaling. And I should say just a matter of scaling, because scaling is a whole other set of challenges.
I mean, just going from being a solopreneur to working with a second person. How do you manage the information? How do you communicate?
So you've actually already answered part of my next question, which I wanted to look at. How far along does a business have to be in terms of how far developed and revenue, infrastructure, and all that other stuff before you can reasonably expect that anybody's going to write you a check at all? So venture capitalists, obviously, that's that second stage. But thinking in terms of angel investors and/or crowdfunding, what do you usually recommend in terms of how far do you have to bootstrap it first is really what it comes down to.
I think you always have to bootstrap it. All investors are looking for an entrepreneur that has skin in the game.
Sure. That means his own money.
Your own money,
exactly. Yeah. Thanks for clarifying that. In other words, you don't want to be sitting across the table from somebody that says, "I ain't got nothing. I just got an idea, and I'm gonna."
Yeah.
Those are dumb.
I want to use your money to test market my idea.
Yeah.
Maybe you'll get a return.
You get to do that long after you've made money quite a few times.
And quite honestly, we get it honestly. In other words, we were all raised believing in Santa Claus. Some of us haven't gotten over that.
We were all told the stories about the entrepreneurs that thought up a brilliant idea one day and then hit instant success the next day. But
Right
reality
now,
is a little bit different.
Yeah.
Right now, crowdfunding really fits in our class on crowdfunding. Fits into, can you frame it as a project?
Yes.
Can you frame it as a project? Can you make it so they get something from it by investing in the project?
So that could be either a book, it could be a work
It could be a
of art,
book, it could be
record album.
Look at NPR. In some ways, once a year they have crowdfunding.
Yes.
And then you get your little overpriced books when you send them, or your overpriced bag,
or PBS with Pledge Week.
Yeah,
Your Tickle Me Elmo doll. Yeah.
Overpriced Tickle Me Elmo doll.
And we hold you hostage, and you don't get to see any more programs until you
give
give us enough money.
Money when we reach it. So that is kind of a macro understanding. And the toughest thing understanding in crowdfunding is you got to take something you're working on and frame it as a project, and get it sexy enough that people will make little macro commitments. So people are
they're willing to give you
this extra money in my wallet, I got to get rid of it as soon as possible. It's a lot more work.
I have that problem all the time.
I know. And it's a lot more work than you think. And so getting on the court of doing it and understanding it's important.
Yeah. Well, and I think the other key piece of crowdfunding is that it differs from buying a product in the sense that people don't necessarily expect to get equal value for the money they give. The part of it is they're excited about what you're doing. They think it has a real chance of succeeding. They want to support it. They want to get something for it, but they're not necessarily going to make an issue of giving $100 and only getting $20 direct cash value back. Versus with a purchase, if I spend $100, I want $100 value.
And the other thing is practice at building the muscle of doing something that gets a person to take their wallet out or open their purse and spend money. So even
or at least ask and let them tell you no.
Ask and let them tell you no, because even I've met people who have started little eBay businesses and learned a lot about business from them. Mm-hmm. And I know there's a lot of political charge around residual income or network marketing, but some of the business people I met, they got their chops.
Those things. Robert Kiyosaki actually said, I think it was Robert Kiyosaki said, if you want to learn business, go get into an MLM and cut your teeth on it.
Right. And then, of course, there are people who are outstanding. Terry, I'm trying to think of his name. That's in our area. Anyway, Petrovitz. He's a machine that's really made it and got his family made it and everything else. So find the big thing is find proof of concepts. Almost undervalue. Get nervous if your idea has no one else making money. It's kind of the reverse of, I got an idea, no one's ever thought of it, I'm gonna make money. I got an idea, no one else has thought of it. You've got a hell of a sales pitch. You're going to have to type something where someone understands it, because it's an alien that landed that no one's going to see.
Alleviate the nervousness, just get out there and test it as quickly as possible and spend real money.
Small amounts.
And be willing to fail at it. So, but I think the other key piece is learn how to fail quickly and cheaply with low risk. So you can decide to back off.
Fail often, fail fast, and fail often.
Good. I mean, it goes back to the same with Jim Collins and his concept of fire bullets before you fire cannonballs. Right. I mean, I think part of the important point to drive home is if you don't establish that discipline, what can happen is you go to the other extreme and then all of a sudden take a really big risk that you actually weren't ready to take.
Yeah.
So
we've seen that.
I can tell you stories about that one.
Yeah, that's right.
Yeah. All right. So to kind of tie this together here, any last thoughts on Well, first of all, one question I have for both of you is, do you think anybody can be successful as an entrepreneur, or do you think only certain people are cut out for it?
I think it's all based on how uncomfortable you're willing to be. I'm just going to get this, just like coaching. How fast can we move this process? And I go, how much discomfort are you willing to put up with? How much not being yourself are you willing to be?
Anybody but yourself.
You got it. It's change is expensive, and it takes effort, and it's not always comfortable, and sometimes it's not. Sometimes it's a perfect fit and everything goes, but that's a smaller percentage than others. So I think that's a big thing. And then also, I don't think we can get into your 12-pack, but the importance of organizing, answering some questions that you have to move forward, getting people to look at the money. So you at least have an answer in each category. Maybe could you mention one or two of those, because that's pretty important in an investor.
Yeah, the basic concept is you have to have, you got to identify your product or service and its uniqueness, what market you're going after, and how you're going to make money. In other words, can you sell your product or service for an amount more than it's going to cost you, so that there's a profit, so it becomes a real business.
Yeah.
So, and actually, we're going to tie a piece of that together here with our one-page business plan that we're thinking about doing, that we probably could publish some stuff on, or go out and share some ideas on at some point here to help some other folks that may be struggling at that entry level about how to organize their thoughts, because the whole thing about the business plan is making sure you're asking all the right critical key questions, or having an answer for those, or know how to get those answers by going out to the marketplace.
So it sounds like you're both saying you think anybody can possibly do it if you're willing to do the process and do the work and put the effort in.
Yeah, I've just seen people that go, it makes no sense they're making that much money so many times, in all types of levels. How's that happen?
So either of you, any final thoughts on what it takes to be successful as an entrepreneur as we bring this podcast series to a close?
Yeah. Work with people, get engaged. We're gonna play with my theme. Be more than yourself. That's a nice way of putting it. Okay. Take risk. No, you can't hide behind a logo or term. See it as the greatest personal development path you could ever be on, and start getting a network of people that are serious about making things work, that have some track record to associate with. If you're associating with people that have great ideas but no one produces anything, you need to upgrade the friends. How about you?
I'll listen to you, because everything you say is coming out of your 20, 30 years of experience and success, and so it's all right on.
Well, thanks.
The big piece to me is I always come back to Napoleon Hill. Whatever the mind of man can conceive and believe, it can achieve. And to me, that's absolutely true. The stumbling block in that is a lot of people think it should be quick and easy because we live in that instant society. But you just hit the keys that you have to get out, get uncomfortable with your comfort, get out there and do it.
Yeah.
And once you get out there and try it and use your passion and perseverance, then you can't succeed.
And I want to get back to one more, viewing yourself as the product. What is your best return on investment to the world? And you are probably the worst person to identify it. So you're going to have to get other people helping.
Yeah,
that's it.
And that's where it comes back to your thing, Dave, about the hedgehog and the Jim Collins model.
Yeah.
It's very, very strong. That's a great way to start that process.
No, I think that's a great point. That when you're identifying your hedgehog, sometimes it requires outside perspective, which goes back to what we talked about mentorship. All right, so this brings things to a close here for our 6-part series. There will be plenty of more future podcasts on the Introverts in Business podcast, so feel free to leave your comments on the YouTube channel and or the Facebook page if there's any topics you'd like to hear focus on in future episodes. And there will be plenty of other folks. Hopefully we'll bring both of you back in other capacities. But excited to get this going, and I hope that this has provided something that you're able to take out into your business and utilize.
And before you go, I want to really acknowledge you for putting this together. You came up with it. You got us together. You enrolled us in it, setting aside time. And And how can people benefit from you for a minute?
Okay, thank you, Martin.
What services you have to offer?
Yeah, well, right now I've got a business. The webpage is called Your Social Mojo, which is separate from the podcast, so I haven't really talked about it too much just to avoid confusion. But essentially, I put together strategies, strategic plans to help businesses utilize social media to accelerate word of mouth in their businesses. So
Okay.
I'll talk to anybody who wants to do that.
Right, and you have a number of books.
Yes, I do. Yes, I do. We'll be talking about those
Down the line.
Yeah,
So
down
watch
the
out
line,
for it.
yes.
Okay. Great. Yeah.
All right.
Excellent.
Well, till next time, everybody, and we'll be talking soon.